Hey guys, how are you? Good morning, happy Monday, wonderful week to everyone. Please give me some okay that you can see the screen, that you can hear me. I hope you had some wonderful weekend, good rest, and you're ready for another exciting week. Perfect. Thank you very much for the confirmation, guys. So let's begin. Let's start here. First of all, for all those of you who watch us for the first time, welcome to the family. And besides of the reminder that we are there for you in the Telegram groups, as always, two important things. First of all, make sure you watch the video tour so you understand how to use this members area in your favor. You can find everything you need here and more than that inside here. And the trading report, this is the one that you receive as a live trading meetings summary. Okay, so you can always go back and refer to that. You also have a video here how to read and use the report in your favor. The idea is very simple. All the trading ideas we have, if it's a follow-up or if it's developing trend or prepared setup, depends on the market how it gives to us. Everything you can find here. List of the most important webinars to watch in your own pace and your own time to understand our terms. And in the table, what you have to do is just to click the image. It will open the chart for you with the explanation, basically briefly, of what do we trade and what do we expect to see. It is separated by the markets, okay? And below you would find the comments, a little deeper explanation, again a summary to what's discussed in the live trading room about everything. For your comfort, you can always refer back, watch the idea, and have clearer picture of our expectations. This is not a replacement to the live meetings though, so if you have the chance, watch the video or the recording, or at least highlights, but make sure you understand what's the expectations. Crypto ideas also you can find here, of course, in this section. So let's begin and see where do we stand. So the previous week ended up with slow down motion in the market after a very active period we had in the summer and partially in September. The second part of September and the beginning of October, slowing down motions to many of the instruments. Many reasons for that, of course, while the main ones, lack of stability in the political and the geopolitical views, and that's pretty much it. The investors are currently without a clear, obvious vision where to send their money, where to direct the money. And when we see not clear pictures on some of the time frames, when we are trying to combine the multi-time frame synchronization, when it's impossible to do, the say is that the investors are on the fence, neutral, and that's why the opportunities might be less frequent or as always. So for today we have, let's see, 4, 5, 7, 9, 10 of the forex opportunities, rest of the commodities, and so on. So let's begin, as always, with the European pairs. The first one on the list, euro versus the dollar, with the short-term cycle of a daily 4-hour and the 1 hour. The euro dollar suggests us a triple cycle here. Now, while in a triple cycle the area of 100 is uncommon, it could be used only if the ratios between the second leg and the third leg also provide a cycle by itself, and 61.8, that should be the level, and that's exactly what we have here. So that brings us towards a triple descending cycle with a bullish divergence that is in play. Let me just restart my Epic Pen, just 1 second. It's moving slow for some reason. Hopefully better. So that's from the euro dollar. The 4-hour chart should verify each of the daily legs. It's pretty clear that the 4-hour offers nice divergences on each of the legs, first, second, third. The turnaround comes here in the play when we completed this false breakout. The one before was with the bigger view here. And after that, we climbed to create higher highs. And basically the idea of the convergence. So if this is the case, then this supposed to be the first leg in the corrective mode. And if it is the first leg in the corrective mode, the 1-hour chart is the one that should develop the trending condition, meaning to create higher highs, higher lows. And this is what we clearly can see here. Well, it could be done by this way, or of course with the before, right? But obviously we have at least 3 higher highs, higher lows. In simple words, trending conditions. The idea for the euro dollar would be looking for retraces and buys. All that will remain correct as long as we are above the 61.8 of the move upside. Why it's important to protect the 61.8? Because if for whatever the reason the buyers lose the potential or the expected, the anticipated control, and we have a price dropping through 61.8, we do not want to follow this anymore for one reason. In trending conditions, we should not go in one wave below all the Fibonacci's levels, well, all the acceptable Fibonacci's level for retrace. One straight move through these levels is a suspicious sign. Corrective mode in a trending condition goes always as double wave or a range. One shot below is a warning sign by the market. At that case, step back. So the euro dollar is bullish for us. We are looking to buy retraces. And as per the targets, ideally the target according to the triple cycle would be the 50%. In that specific case, we would be more accurate to see the development for one reason. The weekly does not provide us levels, and according to that could push even further down. So the weekly is way below the 61 and holds, right, for a few weeks in a row. So we can't really be super bullish here for with expectations for a long-term turnaround. We definitely have to be shorter, more aggressive, and pay attention how it pays out. So we want to see the corrective mode. After that, we will see. All that is relevant, as mentioned before, as long as we are above 61.8 to prevent one shot below. This is for the euro dollar. Let me just mark here. If there are any questions, guys, about anything I explain, please write down in the comments or in the chat, right? Even though you cannot see the chat, I see it here on my second screen, so I'll stop for a second and explain. Just please ask the questions relevant to the instruments I explained. Next one of the euros would be the one that we traded already last 2 weeks actually. This is the euro versus the pound. We have been trading it to the upside. All the trading as we had it was this, as you remember, right? As we started to build up the structure of higher highs, higher lows, expecting bullish continuation after the retraces down, and all that came to us after the double cycle of the daily chart with the bullish divergence. So the daily double cycle delivers its correction to the upside as expected. The biggest question is what's next, and the way I see that, the steam of the buyers is coming to the end, and this should be the area where very likely the bearish pressure would start to build up. Why is my view for longer term bearish? And it's important to note here, everything here is super sensitive, because the rumors, speculations, expectations, call it whatever you want, from UK and Euro, Brexit related, could simply change the directions in no time and affect the technical view. That's why we have to be very specific with validations and invalidations. According to the monthly cycle, we are in a triple mode here with the bearish divergence and false breakout on the very top. According to the weekly, we bounce from the extreme divergence where the MACD and the RSI created new highs. And according to that, we should be facing corrective cycle, meaning the waves or any sort of a range continuation movement. This or other way around, so the rallies should be the plan. The ideal scenario would be if the daily by itself would create trending conditions and bearish hidden divergence, but there is a good chance it will not do that, as this MACD is completely high. So we need to keep this idea in mind, and remember, if this is the first possible cycle from the weekly legs, then very likely we're going to stop here and continue lower, and then it will become trending conditions. So by laying it down, let's go to the 4-hour chart. It does what we wanted to see. The higher highs, higher lows provided us the opportunity to trade the buys during the last period, and we had two of them. One of them was the bullish hidden divergence here. The other one was bullish hidden divergence here previous week. Both provided nice buy opportunities and the rallies, and right now there are two ways to work with that. First of all, assuming this is the double cycle that is developing, then we simply can mark this trend line and say break below the trend line, and we are back to the bearish view. Second is to prepare the levels. Preparing the levels meaning measure the double cycles if this is the first leg with the two waves correction, and now the second leg developing. That's the critical levels we want to play with. 1, 2, 3. Okay, and we can say from these areas we would be looking for reversals. What kind of reversals? How are we back to bearish trend? False breaks and lower lows, convergence, or on the lower time frame, spotting bearish trend change, meaning lower highs, lower lows. Why is that what we would like to say? Lower highs, lower lows represent a potential bearish trending conditions and could be the change back to the bearish direction after these two waves rallies. Okay, so as for now, because we never know where exactly we're going to hit of the levels, as for now our plan would be the break of the rising trend line. Once we break below, it should provide good bearish opportunity, which we would want to go and to trade. Okay, and by saying that, for all those of you who are involved with the buys, it is okay to carry them as long as the trend line was not broken and the market doesn't have false breakouts, lower lows, or lower highs, lower lows in play. right? But remember, when you have your verification cycle showing you divergences against you building gap, and when your trending cycle, which is the 1 hour chart in that case, could also or would also show you a bearish divergence against you, it's great time to do the what? Cash outs, or at least partials. You do not want to wake up to randomness by the market or some tweets from the leaders, some leaked rumors or speculations from the leaders, right? We live in a Twitter political world, which could create immediate instant noises and of course change investors' expectations. So that's for the euro versus the pound. We are looking for the buys, we are getting over with the sells. Oh, sorry. We are completing with the buys, looking for the sells with the break of this trend line. Next one is the euro versus the Swiss, also from our list. So what do we have on this pair? Bullish divergence on the weekly, bullish confirmation on a daily with a phase of triple cycle, and now playing the corrective cycle. Corrective cycle could be two waves. Corrective cycle could keep it in a range, this or other way around. As for now, we are facing only 1, 2, 3, 4 spots, right? So it's early to know if it's two waves or a range and a breakout. That's why for us the plan is buy retraces. It was the case previous week. It is the case yet. There is nothing changed with this pair. As for now, looking for retraces and bullish setups is the direction for this pair. And the last one of the euros for today, for the beginning of the week, euro versus the CAD. What do we have with this pair? Weekly triple descending cycle with a bullish divergence ending between the last two lows. Daily chart to verify each of these legs to be cycled by itself. Two false breakouts that come in play, one horizontal here, second horizontal here. The trend line of the last leg is breaking up. The 4 hour chart is the one that makes the structure of higher highs, higher lows. Therefore, buy retraces is the plan. As simple as that. This is what we call synchronization. When any given 3 time frames, sequence 3 time frames, not like weekly 1 hour and 5 minutes, time frames that have no relationships in between themselves. 3 sequence time frames showing the same technical structure in the same desired direction give us the direction of the buys. What should we be care of? The level of 61.8. Why? Exactly like with the euro dollar explained before. If we cross through below the 61.8 in one shot, this is a very suspicious sign, and that means that these trending conditions are fake, are early, or just not there, not in play, right? After trending conditions, we are good with corrective mode, which is 2 waves or a range. We are not good with one shot through all the Fibos. If that happens, you know that something is fishy with the market, with the given instruments, and it's better to step back. Okay? So this is for the euro versus the CAD. Buy retraces with bullish setup would be our plan, at least for the beginning of the week. According to the daily, we want to see corrective cycle, as daily is a cycle by itself here. So we want to see 2 waves or any range here, right? And if the weekly would come in play, by the way, That means we potentially have the room for here to here. Right? Also pay attention to the 2-second engulfings on the weekly. In many cases, that's a very powerful sign. We're holding a massive area here and psychological 145. So if there will be no surprises, mainly from the weakness of the euro, so that should be a very nice opportunity. So these are the pairs we have from the euros: euro dollar, euro CAD, euro franc, euro pound. The rest, as for now, personally to me, are not so clear. I couldn't match the cycles yet there in play. Following for possible for the next days on the euro versus the Kiwi and the euro versus the Aussie, but want to see the price movement there, how it will develop. So the next one's on the list, pound. Before I move on, is there any question about any of the euros I explained? Once again, guys, the instruments that I don't include are instruments that, one, don't have clear cycles that we can combine in multi-time frame for synchronization. Option number 2, prevented to overexpose. Okay? We do not want overexposure. So up to 3, in some cases 4, of the same currency can be okay to split between, or to find the setups. More than that is not good. Good. So no questions for the euro. Let's continue. Pound Kiwi is the one that we have on the list. So what do we have for the pound Kiwi? We've been trading the sells previous week, expecting 2 waves. When it was ranging, it was a warning sign. This is where we discussed previous week about cutting the exposure, not changing the directions, cutting the exposure. Since then, the momentum was gained. We break to the downside, and basically the pound Kiwi delivered the second leg. Now it's building up a bullish divergence, and the question is what's next for us. So here's the time to find the synchronization. According to the weekly cycle, we are in triple double structure. The trend line was broken, meaning by retraces, we expect a longer term rally. Daily has to fit in this breakout, providing higher highs, higher lows. Daily delivers. We are building up higher highs, higher lows. We miss here the 2 candles rule, and that's correct, but we definitely have here clear moves inside. No dojis, clear moves inside, beautiful candles, and beautiful deep retrace down. So the pair provides the higher highs, higher lows. Buy retraces would be the plan for us. We are building here a bullish hidden divergence, meaning the pair is likely preparing its engines for the further rally. 4-hour chart should confirm the daily bullish hidden divergence, and it does already. That means by the break of the falling trend line, we should be back to bullish view, and once this trend line is broken, buy retraces becomes the preferable direction. Why should we wait for trendline breakout? This trendline represents the pattern of ABCD, corrective pattern, corrective structure, 2 waves, or 1, 2, 3, 4, doesn't matter how you name it. The idea is the same. Okay, so once we break the corrective structure, we assume the trend is back in play. Why cannot we buy specific given levels? We can, but that's much more advanced. And that means we will have to measure these 2 waves, and each of them will have to be a completed cycle on lower time frame. And the structures will have to be on lower time frame. And I want you always to remember, if we work with weekly and weekly cycle and daily verification, 4 hour is the lowest accepted tradable cycle time frame. Okay, to go lower would not help us to trade the weekly cycle. It's very, very important. And also remember, so if we go lower to 1 hour, so why won't we go to 50 minutes, or why won't we go to 5 minutes? Where is the limit of squeezing? The lower you squeeze, the more you will have to verify, the more you will have to spend your time on front of the chart, the bigger the room for mistake. And this is something that traders, for some reason, love to do, right? Squeeze lower, right? To find the best entry. While it sounds amazing in theory, in reality, it's much, much, much harder. And there is nothing wrong with trying to do so, but you have to keep in mind that the chances to have a temporary loss or a local loss are bigger than in the higher time frame. And the question would be, will you be able to re-enter after that? Let's say you have some trendline breakout which fails. Would you be able to re-enter the next one? If the answer is yes, you can try to squeeze lower. But the answer for almost all the traders is no, because one loss, or even worse, 2 losses in a row automatically do what? Psychological block. That means what? You lose the confidence in your analysis, in your expectations. You finish with a loss or 2 just to watch the market moving in your direction without you. So that's why it's very, very important to remember. To squeeze lower, it's okay theoretically, but in the test of reality, always ask yourself this question: why? Trading should be a great tool for you to find opportunities without wasting all your day or week or months in front of the chart. And that's why I have my rule of 3 sequence time frames. There is absolute no need to go lower. You can go lower only when everything is synchronized for you, but remember, it's riskier and much more advanced. So it's very important thing here. So for the pound kiwi, we want to go low. We want to become bullish again once the 4 hour become a bullish structure, meaning ABCD broken to the upside. Then we can discuss about the buys again. There is a question here. On a daily pullback, is the double wave this one? The current one? If you refer to this one, then the answer is yes. The answer is yes. As a rule of thumb, there is no way in advance to know how deep a trace can go. This is important to remember. Okay. So as a rule of thumb, you would be okay with any of the Fibonacci's level, starting from 23 and lower, as long as you are in synchronized trading conditions. Ideally, 38 is the level you want to see, or at least close to that. But Mr. Market is not Mr. Ideal, right? So as long as all the rest of the conditions fit in, you can work with that. What you want to avoid is this. Let's say you got 2 waves here. Without Fibonacci's, without anything else. Like the gold. Let me show you, for example, the gold, and you will understand what do I refer to. Gold. If this is the triple descending cycle, for example, okay, check out the retrace. Well, it's finished here, okay, but look at the beginning of the week. Sorry, the beginning of the cycle here. So the question would be here, is that okay? And that's exactly the situations you would want to avoid. When the correction is too small, but you already have all the divergences against you. That's the place where you would want to be careful and accurate. Okay, so that's the pound kiwi. Another one we had on the list was the pound versus the Aussie. We've been trading it to the upside after the break of the trend line until we have divergences against. 4 hour became a bearish divergence, and the daily was blocking that, well, sort of a double top on a massive resistance area and the psychological 185 with a divergence by itself. That means, as for now, pound Aussie is removed from the list, finished with the buys. Personally, I think we should be exposed to some deeper corrections here, and then again to the upside, but it's just currently a wish. It's not a fact. So that's why it's out of the list. So from the pounds, the one that we start the week with a direct pound exposure is the pound kiwi. We also have the euro pound together with it. Okay, so that's pretty much it. Pacifics, Aussie versus the dollar and Aussie versus the franc. That's what we have in play. So what do we have in the Australian versus the dollar? Where we are here. So the weekly provides us the triple cycle. With the bullish divergence developing, daily verifies it as a cycle by itself. 4 hour chart, a special cycle by itself. Little Fallsberg on the bottom with bullish divergence. Trendline breakout. We do not have here any structure of the higher highs yet, but we do have a first leg to the upside. Assuming this is a beginning of some deeper correction, this first leg would have to be cycled by itself. So while we can't yet work with the weekly cycle, as not daily and not the 4 hour have the structure of higher highs or Fallsberg and convergence or 3 higher highs, higher lows, not the daily and not the 4 hour. That means we cannot work with the weekly cycle. So we can work with the daily cycle with the 4 hour chart verification. And even if we take the minimum one, we can aim the 38.2. If we go to the bigger cycle, then the numbers is slightly higher. Now, what's critical for us here? If the 4 hour chart is the first leg in the corrective mode, the 1 hour has to be cycled by itself and the 1 hour trending condition by itself. Sorry, bad drawing. We can see the higher highs here. And after that corrective cycle, 2 waves or a range, and we can look for bullish expectations. 4 hour chart, we assume this is the first leg, therefore this is the correction, and we expect the second leg to develop. Right? In a daily cycle with 4 hour chart verification, the daily correction would be shown as the legs on the 4 hour chart, and that's if this is the first leg, it has to be the cycle on the lower time frame, which it is, and now we want to see the second. What should we be care of? Exactly like with the euro CAD and the euro dollar, the level of 61.8. If we cross straight below in one shot, remove that from the list. As long as it's not the case, the expectations are to the buys. Important thing to pay attention to, this is a classical bend to bend movement, so that's totally okay if we are closing the Bollinger Bands with the price on it, right? So the lower band goes up and the price meets it, and then the continuation. So looking for the bullish views as long as we are above the 61.8. And the next one is the Aussie versus the franc. This one, right? Now, where is that? Here. The weekly is the massive cycle we have in play. Bullish divergence is there. Daily verifying each of the legs. And daily is a cycle by itself. And we are after corrective cycle, meaning 1, 2, or any sort of a range. Buy retraces would be the case for us. And while in the Aussie dollar we do not have the structure to trade the weekly cycle, here we do. Why? Because first of all, we have the after the false breakout higher highs on the daily, but second, the 4-hour has the structure of the higher highs, higher lows, something that the Aussie dollar is missing. Okay. Then we got a 2 waves correction, trend on breakout, and basically we are after the buys. Okay, so buy retraces is the plan for the Aussie franc. Next ones, the New Zealandians. We have couple, New Zealand dollar, New Zealand Kiwi, New Zealand CAD, sorry. Let's start with the New Zealand dollar. What do we have on this pair? Triple descending cycle. Can work with that. Even before we can start drawing, it will just be uglier. Now, very interesting fact, weekly has a bullish divergence as well. We are just missing the 4-hour chart to provide classical higher highs, higher low structure. So not obvious yet about the long term, but even on the shorter view, which is the daily with 4-hour chart verification, if that's the case, we assume this is the first leg, and then we expect the second. If this is the first leg, the 1 hour has to be a trending structure, and it is trending structure in play, and we expect a trace and continuation. What do we want to avoid? A straight cross below 61.8 would be a warning sign for the buy view. Okay, so that's not new for you. Today you saw that in a few occasions. So the expectations for us, 1, 2. Next one on the list is the New Zealand CAD. Same idea. Weekly is the bullish divergence. Daily is a bullish divergence. 4-hour yet to create a classical structure of higher highs, higher lows. However, the 4-hour already has a structure of false breakouts. Apologize. Connecting the trend line and connecting the horizontal. We have a bullish divergence in play, and we have a convergence. And that's where we assume the turnaround happens. Once again, we want to be very specific here. So as long as we are above the 61.8, we expect the corrective cycle in play. We don't have a higher highs, higher lows for trend conditions. We do have 2 false breakouts and convergence. Okay, so the expectations of ours, looking for the corrective cycle. Corrective cycle could be 2 waves or any sort of a range. This other way around, by dips, will be the plan. Okay, and the last one of the forex pairs. First of all, the CAD franc, which we have been trading double wave down correction. This one paid, so just want to show you that we have to remove it from the list. We got the 1, 2, game over. How will that be developing next, range or whatever? We don't know. Personally, to me, the structure is really not clear as for now. So simply going neutral, CAD franc, job done, previous week, neutral for this. Dollar franc is the last pair on the list. We have a triple cycle on the daily time frame with a bearish divergence, with the 4-hour chart verifying each of the daily legs to be a structure with divergence by itself, here, here, and here, and of course the most recent one, each of them with the divergences. We got two false breaks in a row here in play. Lower lows come in the direction. Sell the rallies is the expected direction to us. Keep in mind, corrective cycle could be two waves. Corrective cycle could be range. This or other way around. Sell the rallies is what we're facing currently with the dollar franc. With very zigzagging market conditions, we are facing here some sort of lower highs, lower low structure. So two waves or bearish hidden divergence or a range would be good opportunity to start looking for setups. Early to try and to predict right now how it will be developed. Sorry, I had a bad drawing before. This is the lower highs, lower lows I refer to, of course. Okay, so two waves or a range should provide interesting opportunity. We will see how that goes, but dollar franc, our direction for the short term is looking to sell the runs. Before I move on, any questions about any of the forex instruments? If yes, please ask now. If no, we move to the commodities and the indices. Beautiful. Seems everything is all right and clear. Therefore, let's move on. Gold and silver. Now, here is the thing with the gold and the silver. Believe it or not, so many traders are trying to figure out what's going to happen with the gold. Well, so do I. Previous week, we were bearish. Actually, previous 2 weeks, expecting the two waves. We got it. Then we blocked with the bullish divergence. Game over. Then the idea was if we break above, we might see that rally. The question would be, rallying to where? Rallying to what cycle? To what target? So according to the higher time frame cycles, if we check from the super long time frame, which is here, we reach the 50%, game over. If we check the two waves expansion, we reach the 161.8, game over. Right? We are sitting on a bank zone right here, inner area of full of orders, blocking every further attempts for buys. We can't cross through, and yet not showing any interest for the sales. There is no cycle for that. According to the weekly, the last divergence is extreme, right? So while the daily divergence might look super sexy for buys, always remember there has to be a cycle or some structure to support the buys. As for now, we are missing it. Moreover, if the daily was the last triple cycle build, corrective cycle and two waves which already happened could always be deeper, meaning something like that. As per the triple cycle, the target could be 50%. Or even that, range is also a structure. And if this is the triple cycle, so the range could be longer. Therefore, there is no evidence in terms of cycle for the buys. And only because of that, and the fact that the daily still has the room possibly to reach the 50%, the gold remains under bearish structure. Another important fact that it failed to break the ABCD structure yet, and the MACD fails to show its bullish interest. It all keeps under the zero, which is a negative view. Therefore, as long as the tops hold, we will, and despite the fact that we moved neutral previous week, waiting to see for next moves with expectations to return bullish above the trend line, we can see it fails to deliver that. So we need to rethink, and rethinking here bring back the bearish pressure. My personal view is that we are continuing to the downside. The 4-hour chart moves in this structure, while the bearish hidden divergence should not have too much value because the daily was bullish divergence in the time. The fact that we are not breaking above the falling trend line, and the fact that the daily is still in the corrective mode, puts back the pressure here. This zone holds. And after a fight here, this is a fact. And moreover, the 1-hour chart, if you drop, starts to create a structure of the bearish trend. Lower highs, lower lows. Okay? You can see that clearly here. Okay, so gold is back to the bearish view, and as long as we are holding these tops, we expect deeper continuation down. Natural gas, bullish hidden divergence in play. We expect the second leg. 4-hour chart, trend line broken. Natural gas returns to bullish view. That's pretty much it. I have nothing else to say on this one. Buyer, the stock that we have been hunting, we are bullish as long as the trend line holds. Right now delivers some bullish hidden divergence, so maybe it's a beginning of some nice adventure. We are bullish here due to the weekly massive cycle and the expectations of deeper correction. That's the only stock that we are following in play here. There is one more for invest, which is the Deutsche Bank. Nothing new from there, zigzagging for a while. And indices that we have in play, actually not in play, in watch list, are the German DAX and the S&P. I'll show that in a second. First, Ahmed, what about silver? What about it? I personally see no cycle in play there. And unlike the gold, silver on its cycle reached, if this is a triple cycle that it had, triple ascending, this one reached the 50%. So I see nothing there. Back to the indices and then cryptos. We have the German DAX. Which is holding its bearish divergence among the tops. Daily with its on hold. The idea for us is sell the rallies. We must be very careful here with one thing. The 4-hour yet doesn't provide this as a, let's say, bearish structure, one shot. So we have to be careful here. If we go suddenly above 61.8, that immediately removes the expectation of the cells. Okay, so the German DAX is bearish while we are below the 61.8. If we cross straight above it, remove, and that's pretty much what is trying to happen on the S&P. You see here, one shot, one straight shot. It's not double wave, nothing in play. If we cross above, it's a suspicious sign, and S&P would have to be removed from the list. Right now, it's right on the level, so we'll need to see how it develops. So that's pretty much it from the indices. Tibor, natural gas went through 61.8. No, it didn't. We're holding it right here. But also it's a trending structure. Higher highs, higher lows with two waves correction. So it's a bit different here. You definitely want to avoid one shot, right? Two waves is a corrective structure. So that's okay. Right? You just want to avoid one shot because one shot is not a corrective structure. And if it goes below to all the levels, that's the sign, the place where you will want to be careful. And cryptos, we have two ongoing. First one, the Ethereum versus the Bitcoin, where we hold our bullish expectations, right? Retraces and buys. So we are going from here, and then we are going from here. They all still developing. Tibor, that's it. Futures have different charts than you will see on the spot market. Indeed. And the last one that we have in play is the Ripple XRP USD is the symbol. We want to see the break of the trend line, which yet to happen. But the great news, 4-hour chart already giving us the structure of the higher highs, higher lows. And that's why buy retraces already could be in play, of course, with a warning sign of 61.8 if we suddenly go straight below. So in cryptos, Ripple and Ethereum versus the Bitcoin. That's the two that we carry from the last week observation. And that's the preparation for the coming week, guys. Okay, you can see several new opportunities on the list. Some others are removed as they delivered, like the cat franc, like the pound Aussie after the rallies on the previous week. Then two divergences against us, lost synchronization. Pay attention to the indices, because if we cross the 61.8 in the S&P, for example, it fails the bearish view we had, and that will have to be removed, right? And of course, the cycle would have to be adjusted and remeasured. So that's all for today. Thank you very much for your feedback, guys. Tibor, welcome to the family. Great to see you with us. I'll see you guys in the Telegram group. I'll be a bit less around on the next 10 days due to some personal things I have to take care of. So if I don't reply quick enough, please remember that. Okay, keep it in mind. I'll try my best, of course, to reply as soon as I can, but have it in mind. And that's all. I wish you a wonderful week, guys. I'll see you around, and Jordan will be with you starting from tomorrow. Thank you for being here. Ciao for now.